Hi, Andy Nybo, head of derivatives here at TABB Group with Matt Simon, an analyst. Matt just came out with a phenomenal report on hedge funds, 2009 report. You looked at a whole bunch of different issues, but specifically I'm interested today in revenues, hedge fund revenues, 2009, 2010. What do you see in that space? What's happening?
Coincidentally, Andy, it's funny, we're releasing this report as our 27th report this year with the Yankees on the backdrop of winning their 27th World Championship. But at the same time, we're also seeing a lot of interesting revenue numbers put out by some of the public hedge fund companies. Public hedge fund companies have have had some mixed results. Some have been good, some have been bad, some have been on the backdrop of a poor performance year last year, and a lot of investors have pulled money out of the industry. Based on some of the results that we had from some of the people we spoke to, 25% say that management fees are going to be down this year, and about 15% say that revenue from performance fees is going to be down over the next 2 years. So what we see managers going from they have less competitive pressure to be able to compete on the management side of the business.
There's a lot of talk last year about the 2022 management fees. Any pressure on the typical commission structure for hedge funds?
Yeah, I mean, what we found out is that 2 and 20, although it's alive and well by many of the largest hedge funds on the street, we also found out that some of them have sweetheart deals and they have different terms for some of the bigger investors, and that actually when you weight it by assets under management, 1.75% and a little bit higher than 20, almost 22% for the performance side. So we're kind of looking at a 1.75 and 22% model actually.
Oh, right. And what about going into 2010? Do you see pressure on that? Any more pressure on that? Do you see fees rising, performance fees increasing?
Yeah, it's a good question. I mean, I think what we see today is that we see the management coming down a little bit faster than we see the performance side of things coming down, and that's directly in comparison to that hedge funds drive most of their revenue from their assets under management, and so they're going to be competing and trying to get that capital from an investor base that's really not that confident in the hedge fund industry today, on the backdrop of Madoff and some of these insider trading scandals that we've seen recently. So what we'll see is probably management fees come down slightly and performance fees stay pretty stable, and then going there, we'll see how things turn out.
Oh, great. Well, it's a great report. Thanks for your comments today. Thank you very much. Again, Andy Nybo, Matt Simon with TABB Group.